Hi, how's everybody doing on this lovely Monday? This is Nate, the stock guy here. Just gonna give you a brief description of one of the strategies that is working for me at this moment in time. Currently, I am paper trading. I started out with $500 in my account, and I had like a couple losses or whatever, which is fine, and that's okay. Trading is a marathon. It's not a sprint. Um, and I was just going to let y'all know the strategy that's actually working for me, and my mentor actually made $1 million off this strategy. I'm going to give you several strategies that works in the low cap, small cap marketplace, and one of those is buying earnings winners, contract winners, and shorting pump and dumps. And I'll give you a brief description of all. Buying earnings winners is actually when companies have to report earnings, every quarter. And basically what, they report and file SEC filings. SEC is basically a organization that gets all the data from these companies. And when companies report earnings, they send out press releases stating their financials, and if they got good earnings, the stock rises. And that's the main strategy I want to talk to you all about today, because for me it's the safest. The risk reward is great. So let's just go ahead and jump into it. Alright, today I paper traded this company, LIVE, I'll call it Live for short. And 3 days ago, Live Ventures Incorporated reported earnings, December 4th, 2015. You can see here Live Ventures Incorporated to release special fourth quarter financial highlights on December 10th, 2015. And go ahead and I'm going to go ahead and basically let y'all know the strategy. I have a screener on my E-Trade platform. This, okay. How I find the stocks to trade is I can go to Yahoo Finance, and of course I've got my E-Trade platform. But I look for the biggest percent gainers on the day. Early in the morning, if it's 10% on the day, it catches my eye and it pops up on my radar. And the next thing is I see why the stock is spiking. And just like this, over here in the news section, I can see that they had a press release. Okay, so they had a press release December 4th. This is a 100-day chart. It shows the 100-day chart, and I'm just going to go ahead and let y'all inform y'all on resistance and support. The best time to buy stocks is when they break resistance. Well, resistance will go out to 2 years. Resistance is basically where a stock goes to a certain price level and it cannot break past that point. That is called resistance. For an example, 419 would be, in the low fours would be resistance. It touched here, it touched here, it touched here, and it can't break past that level. That would be resistance. Okay, support would be the same thing except on the bottom. For instance, right here, it touched this low level 230s, touched it again in the low, low twos. So this would be support, and this would be, resistance. You following me? So I apologize for that. This is I'm in the chat room, and my mentor Timothy Sox has posted a video lesson which I will watch in just a few minutes. But anyway, you buy stocks when they break past this resistance level, and then you dip buy stocks when they get to a key support level. So I'll just show y'all what happened Friday and show y'all how it popped up on my radar. Okay. The stock's doing nothing Wednesday, Thursday, but Friday it broke past this resistance. See? It broke past it, so my eyes was on it. The next thing, the next checklist, I'm going through my checklist to figure out which is a good trade. Okay, we got the stock rises, past resistance. Okay, let's watch it. Now let's figure out why it is moving fast and hard. So, why is it? I go to the news. I look at the press release. It's a earnings winner. I will not trade a stock just based on earnings. I will trade a stock if the stock moves on earnings. There's a big difference. Now, this stock moved on earnings. I believe, and what I've had success in through paper trading, the less riskiest opportunity to get into a trade is buying earnings winners. This is an earnings winner because the stock reacted to good earnings. I buy earnings winners on dips. For instance, this stock went, up to 245. Okay, it showed it had great potential, and the stock dropped. Okay, well, it found a support level here at 191. This is a dip. You buy on the dip, so you would buy at 190, hold through the day, let the stock rises. Other people, other traders see the press release, so they want to get in on it. That's why the price rises. You would sell at 233. Now let me just go ahead and tell y'all 401ks. 401ks is basically they take a check out of, a certain percentage out of your check, and they take your money and they put it into mutual funds. Okay? Historical fact. 99.9% of mutual funds never get over, 13% annually. Okay? Annually. That's a whole year. 13% annually. Now, let's just say you started out with $500 into your account and you wanted to buy shares of this earnings winner. Let's do the math. You do not have to be smart to do this. So, the stock has proved that it went up, it can move. You buy it on the dip at 190. Invest $500. $500 divided into 190, which is one share of the company. You have $500 worth, so you will end up, if you invested $500 at $1.90 a share, you'd have 263 shares of that company when you bought it right here. Now, when everybody else sees a press release and starts investing because the earnings on this company is great, and you sell it at 236, you've already got 263 shares, correct? Okay. Well, let's do the math and see how much money you made per share. So, what is it? 233. Let's just do 233 minus 190. Okay, that's 43 cents a share times 263 shares. You'd have made $113. Okay, you would have made $113. Now, let's remember the fact that most mutual funds in the United States only make on average 11% annually. So let's figure out what percent you made off of this trade. And this is a regular pattern, guys. This is a regular pattern. It has been happening in the stock market for years, but financial miseducation, they don't tell you about this because, CNBC you know, all these financial news outlets and everything else, they don't want you knowing about this because they're low cap companies. They only talk about Google, Apple, Yahoo, which the shares are like, you know, like freaking $1,000, $2,000 a share, or maybe not that high, but you know, $200 a share, $100. We can't, you know, for guys and girls or whatever, whoever it is, whatever the gender, that doesn't have $1 million to trade with, this is how you grow your money and grow your account. This is just how you do it. This is a normal pattern. So we made $113. Alright, we invested $500. So what is 113? 113 divided by 500. You made 22% on your money in a couple hours. Now I just want y'all to realize what this means. This means that you are beating most of the mutual funds in the United States. And this is a normal pattern. Okay? LIVE, reported good earnings. Buy it on the dip and sell it. You know, the key is we're trying to make 50 cents to $1 a share. Okay? There's a whole lot more to it, but I'm just giving y'all a basic rundown of what can happen. You can make 22% in a day. You know, it's just amazing. You know, this is the basics. This is the strategy that I've been having success with so far. Like I said, you know, there's basically 3 strategies that my mentor teaches me. It's buying earnings winners on dips, and you can buy. There's 2 plays. You can buy them past the breakout, and you know, or you can buy them on the dips. It's a little bit safer on the dips because you already know how high it can go. So I was going to let y'all know, it's Nate the Stock Guy here. If you have any questions, you can email me at natethestockguy@gmail.com, or you can visit our website at natethestockguy.com. And just, you know, share your thoughts. If you have any questions, please get in touch with me. You know, write me a Facebook message. You know, our Facebook page is Nate_the_stock guy. Just type in Nate the Stock Guy and it'll show up. Go ahead and like and share the page if you know, see if there's any value on this. Like I said, a lot of people just don't know these patterns because they don't know. You know, I mean, you only know what you do know. And with me, I search and I search and I search and I do my research, and I love this. I absolutely love it. There's so much potential for financial freedom in the small cap industry, and there's so many predictable patterns. It's unreal, and this is just one of the patterns, and this is just an overview of what I do in the stock market, and I hope y'all can see the value in this, and I hope that y'all can see that how this can change everyone's life, especially your financial freedom. So until the next time, have a good rest of the Monday. And like I said, if y'all have any questions, y'all can get in touch with me. And we'll see y'all in the next video. Y'all have a good one.